Hey guys, this is your host Nitin Binhani and a very warm welcome to my startup podcast channel GetVantage, where we share real stories with real learnings. Now, revenue-based financing or RBF is an alternative form of financing where the investors inject capital into the small or growing businesses in return for a fixed percentage of ongoing or future revenues. Typically, revenue-based financing sits between a bank loan and angel or VC investment, but the advantage for the founders here is that they don't have to share any equity, thereby retaining their complete ownership. So in today's podcast, I invited Bhavik Vasa, the founder at GetVantage, India's first revenue-based financing platform, to share his insights on why entrepreneurs should really explore RBF and how it really works. So, let's welcome today's special guest. Hi Bhavik, welcome to GetVantage and thank you for talking to us.
Thank you so much. Thank you so much, Nitin. It's a pleasure being here.
Let's start with what is revenue-based financing or RBF?
Sure, Nitin, I think what I would love to start sharing by is a little bit of my own personal journey, having built startups and new ventures over the last decade and a half. I think we all, as entrepreneurs, are always looking out for alternative options of being able to access capital. So really, the best way to put it is revenue-based financing is a quasi-equity structure and instrument. And this is a very, very simple and differentiated way of alternative capital that entrepreneurs and founders can access, which is where you're able to take alternative financing, growth capital for your business to grow your revenues, to get to the next milestones of your business without having to really dilute equity, without having to lose ownership and control of your business, and really focus on being able to get that booster capital or the capital advance today that can then fuel your growth, and you have to return that capital as a small part of your future cash flows and your future revenues. And that's the beauty of what revenue-based financing offers to founders and operators of emerging brands. And it comes really from my own personal journeys of wanting this alternative solution and option.
So who all are the right fit for RBF and at what stages should they really consider RBF?
I would actually like to break that myth up front that revenue-based financing is not only for startups, it's for SMEs, small businesses, growing businesses, emerging businesses. And also, I wouldn't like to categorize revenue-based financing based on Series A or pre-Series A or seed. I think the beauty of revenue-based financing is as long as you are an emerging and growing business that is generating some revenue, right? As the word suggests, that as long as your business has started delivering some month-on-month revenue, there is some pattern and trajectory to how you're generating revenue. I think revenue-based financing is a great option for you, whether you're an early-stage startup, a growing SME, or even a much larger growth stage venture that is now moving from a Series B to a Series C also. I think all of us need this booster capital for seasonal spends, for a bridge around. And I think that's where revenue-based financing comes in. As long as you have revenue and you're an operating margin positive business, this is a great tool for you to keep fueling that growth.
Great. What are the major considerations when opting for RBF?
So, the best way I put this as GetVantage and our revenue-based financing model, which we are the first ones doing in this part of the world, we are not disrupting anything. In fact, we are simplifying venture finance. I think for too many years, finance, different structures of finance, different structures of business loan, different structures of equity investment. I think we've actually made finance a little more complicated for businesses and ventures. Bullet payments, balloon payments, reducing interest rates, convertibles, non-convertibles. I think we've actually made it more complex, where if you are an entrepreneur considering revenue-based financing as a great alternative, it comes with that much more simplification, where we are able to offer a small capital advance to a business that needs money for either increasing its digital marketing spends, either increasing its reach and awareness. And by that capital advance, you are able to fuel that immediate need for growth. And that capital comes to you with one single flat fee. So all you're doing is taking a capital plus one flat fee that you're going to pay off as a small percentage of your future cash flows and your future revenues. And that's what entrepreneurs should consider, that this is a great way to have capital that's frictionless, simple, and smarter in the sense of allowing you to let your future margins, profits, and future revenue pay off for the capital you need today to reach your next milestone. The thesis of revenue-based financing is to keep the model extremely simple, make sure that there is no friction in terms of fancy clauses, there are no convertibles, there is no equity dilution. While there are, of course, various structures of how revenue-based financing can be positioned for a brand, but at the crux of it, it is extremely simple. You get a capital, you get a funding amount, you pay a small fee for the valuation of how much funding you can get as a business, and your payoff or return of that funding amount is both a function of what your monthly revenue run rate is and what you're able to grow your business and the MRR you're able to take your business to by being able to have this additional capital to boost your growth.
Okay. So what flat fee does GetVantage charge?
Typically, our flat fee ranges anywhere between 6 to 9%. And more importantly, the revenue share, which is that small percentage of future revenue share, that's also locked upfront with the brand. And this allows me to really not worry about whether I take 4 months or 8 months to repay, right? Because that's all linked to how you perform, how your revenues and how you are able to reach your milestone. So to give you a very simple example, say you are able to take a short-term revenue-based financing from GetVantage for 30 lakhs, and we charge you a flat fee of 2 lakhs, right, which is 8%, something around 2.5 lakhs. So really what you're going to now pay, and we decide the third parameter, which is hypothetically 8 to 10% of your future revenues. So just for namesake, 30 lakhs is what you borrowed as a principal. Your flat fee is that 8%. So now as a business, you will pay back that 32 lakh and some change, which is the principal plus the flat fee, as a 10% of your revenue, right? Now, as your revenues grow and come in over tenure, the day that principal and flat fee is recovered, round over. You don't owe anything to us. We don't owe anything to you.
So what are the qualifying criteria and the repayment options involved in RBF?
First, the business has to be revenue generating. We can consider a business that is generating as much as even 20 lakhs a month to a business that is generating a revenue upwards of 5 crores a month. As long as there is a good trajectory over the last 6 to 12 months, it's absolutely something that can be considered and qualified for revenue-based financing. That at least the businesses have to be operating margin positive. Number two, it's only a question of how much is the brand eligible for in terms of its numbers, how much can we fund them and for how long. It's also so important that when do you as a business take capital to boost your growth? And so does your business have the appetite to repay that capital? Is the capital needed for growing certain pattern of marketing spends versus revenue? And I think those are all great evaluations every founder and entrepreneur should do about their business. And the beauty of what we are trying to build is an extremely data-driven and tech-driven platform, which connects to a business in real time. And this is a great way for us to analyze the business in real time, what its numbers are like. And that allows us to take not only the credit risk in that business by funding it, but also evaluate the potential future of how these businesses will grow based on their pattern and trend and history over the last 6-12 months. And I think this is highly empowering for founders and entrepreneurs for being able to have access to capital that is completely non-human bias, is really based on your business's performance and numbers, rather than really the human biases of who you know in the venture capital world, in the private equity world. Today, we've connected with more than 400 brands and businesses across the country, completely organically. Even though a lot of these businesses might be very early age, and probably if not now, 6 months down the line when your business is more ready, we are ready with being able to back and boost you.
That's great. And how does GetVantage really work?
So to kind of very quickly take all your listeners through the process of the GetVantage model and the revenue-based funding, we are for emerging businesses that are digital, that are online. We are the largest investors in e-commerce and direct-to-consumer brands, to be SaaS businesses, SMEs that are driving more digital. Even the entire GetVantage model and platform is completely digital, right from application to disbursement to the entire monitoring and statement. I urge everyone, if you are a business that's looking for quick short-term growth capital, just come to getvantage.co. You get tons of access to information, more details about what revenue-based financing is on our blog. And at the same time, there is a very simple one-click process of being able to not only get an indicative term sheet. We are able to, from there on, quickly underwrite and analyze, and really right from term sheet signing to disbursement of the capital, all of that is done through a completely digital and online process. Last piece that we have to highlight is GetVantage in the revenue-based financing is not for one time. The round 2 and round 3 comes to you with better terms in as less as 48 to 72 hours because now we are connected.
Finally, could you share 2 success stories, that is the starters which opted for GetVantage RBF and thus they gained invaluably?
Sure. One of the brands we backed is called Rage Coffee. This is an emerging coffee brand which was able to scale up their monthly revenues by 5x because the capital they took from us, they were able to pour that into digital marketing and quickly scale up their reach to new sets of customers that came onto their platform, and they were able to see a 5x jump in their monthly revenues. So another brand that we've successfully funded and helped grow is a brand called Autobricks, which is an on-demand platform for car servicing and maintenance. And we all know that in this lockdown period, we all needed to still upkeep, maintain, wash, service our cars. And this was a great way for Autobricks to really leverage, enter 3 new markets and cities, and also be able to multifold their reach by getting to more consumers to get access to their on-demand service of car maintenance. And again, all of this from a quick booster capital we were able to give the brand to really leverage and capitalize on this up demand in these times that happen for their sector and their category.
So with this, we have reached at the end of this podcast. Bhavik, it was a pleasure to have you on Desire Audio, and thank you for sharing great insights.
Thank you so much, Nitin. Really appreciate.
Are you a founder of an early stage startup and looking to raise funding? Get your startup investor ready before even you start pitching to your prospective investors. For know-how, please visit www.jazaro.in. That is www.jasaro.in.
Lastly, I want to thank all the listeners who took their valuable time to listen to this podcast. Keep rocking, be safe, and don't forget to share.